If you're a real estate professional or a gig worker in particular, 2024, 2025 could be some of your highest grossing years if you're locked in and in the right position. Business Insider, as well as a couple other major publications, put out articles recently talking about how they expect the Federal Reserve to cut interest rates 6 times next year. To put context on it, the Federal Reserve only meets 8 times in a year. They're expecting almost every meeting to be an interest rate cut due to their success against inflation, election cycle, and the fact that the economy, is showing signs of slowing. This, even being partially true, could lead to a significant boom in the economy in ways that will particularly affect those who are self-employed, those who are in the real estate space, and those who are in various forms of gig work that require discretionary spending from consumers. When the Federal Reserve starts to cut rates, a couple of things that's going to happen. The first thing that's going to happen is money is going to become more affordable. This basically means that the ability to borrow money is going to increase because lending standards should start to loosen up, and the cost of borrowing money will start to go down. That is going to lead to more desire and more of an appetite for real estate. The housing market has been pushed down on with the most force that is seen in decades, and it is still growing as we speak. It's not growing at a fast rate. We may have a cool down over the winter, that's just seasonal. Pound for pound, when you start talking about a quadrupling in interest rates or maybe more in less than 2 years, and the real estate market is still growing from demand and inventory issues. Anybody self-employed in the real estate space, if you're in the right position and you got the work ethic, you can see major growth in revenue in the next year to 2 years. They expect the interest rate cuts to go into 2025. So to put context on it, without rate cuts right now, we're in the mid 7s to upper 6s on mortgage rates at the time of this recording. And that's without a single rate cut. If you even get 3 out of the 6 that they're projecting right now in these publications, that could push mortgage rates down low 6s, upper to mid 5s. That is going to unlock a lot of buyers. It'll unlock some sellers, but it's going to create a lot of demand for buyers because we've been in an upper 6.5, 7.5, even touching 8 environment for over a year and some change with a lot of demand still. If you're a real estate professional, this is a gold mine. Real estate agents, loan officers, appraisers, title company, on down the line. If you're tied into real estate where homes being bought and sold is something that you're making a profit, revenue from in any form or fashion, it could be go time for you in the next year or two. My gig workers, DoorDashers, Grubhub drivers, Uber drivers, all of you who are in some form of gig work that benefits from discretionary spending, consumers having more access to capital to spend on discretionary needs, non-essentials. You are in luck, my friend. You are likely in luck. The second thing that happens when you have a rate cut is more money is flowing through the economy and people have more money to spend. Very powerful. What that basically means is that the line of work you're in is likely to see an uptick. You have been starving most likely, or at least experiencing a decline since COVID if you're in this line of work. There's been spurts of booms, and depending on your market, maybe things have stayed hot. But most of us that have been in these different markets, around the country, that have seen interest rates go up along with the no contact, situation with COVID, has created a bit of a dent in gig work. I can tell you right now, with COVID largely behind us on the mainstream level, interest rates down for the first time since COVID, I can tell you right now, you are going to see an uptick in business. People are going to start spending more money, and they're going to travel more. There's going to be a lot more opportunity for you as a gig worker. Make sure you are in position to capitalize on these things. Very powerful time we're coming up on. I want you to comment down below and let me know what you need me to cover from a banking, lending, financial perspective on how you can prepare yourself. What do you need me to cover or talk about around getting your banking together, getting your revenue together, setting up an entity, business banking, small business banking, setting up an entity should you stay a sole prop? I want you to comment down below and let me know what you need me to cover or what insights you need to put yourself in position for this opportunity. I am going to cover videos on my own on this topic, but I'd like to hear from y'all specifically in the process so I can make sure that I'm targeted in on the areas you need assistance the most. To all my pioneers, welcome back. To my new viewers, welcome in. You want to learn more about myself and the channel, start in the description section and work your way to the about section on the channel. Again, comment down below and let me know what you think about these shifts that are coming up. 6 rate cuts, that's powerful. Do you even think that's realistic? Do you think half of it? Let me know what you think in the comment section and let me know what you think is going to happen to the economy, the real estate market, your overall personal finances as well. I want y'all to stay focused, stay in motion. See y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.